Hello everyone. First we will talk about the last night's HDFC Bank ADR rally and then we will cover our regular pre-market report for today 3rd July 2024 for the Indian stock market in terms of Nifty and Bank Nifty. In our last video, we discussed in detail about how the weightage of HDFC Bank in the MSCI Emerging Index is expected to double in the upcoming August month rebalancing. When I made the video yesterday, HDFC Bank announced that they would release their shareholding pattern only on 5th July. However, to my surprise, they published it yesterday itself in the aftermarket hours. And as we all expected, the foreign shareholding in HDFC Bank dropped to just 54.83%. Again, in the last video, we discussed this. HDFC Bank, in order to increase the current factor to 1 from the present 0.5, the foreign investor shareholding needed to decrease from 55.54% to 55.5% level. In this way, this change would increase the foreign investment headroom in the HDFC Bank share from 24.95% to above 25%. Now, with this foreign shareholding of only 54.83%, the foreign investors' headroom has increased to 25.67%. This makes the HDFC Bank comfortably eligible for the current factor 1. As a result, according to Nuvama, in the upcoming August month MSCI Emerging Index rebalancing, HDFC Bank's weightage expects to increase from 3.89% to over 7%. Further, this will expect to bring the fund inflow of around 30,000 to 50,000 crore rupees exclusively into the HDFC Bank stock. So that's the reason, because of these shareholding data released yesterday, made the HDFC Bank ADR in the US market to increase near 4.5% in one single session. I think the shareholding release date and info might be known to some investors, which is why yesterday in the Indian market, only HDFC Bank and the whole banking sector closed positive. If required, please pause and have a look. This is the yesterday's Bank Nifty's individual stock contribution. As we can see, aside from HDFC Bank, all other banks closed negative. If not for HDFC Bank, yesterday the Bank Nifty might have fallen around 700 points instead of just 400. Other than profit booking, there isn't any clear reason why all the banks were negative except for Kotak Mahindra Bank. For Kotak Bank, since SEBI asked Hindenburg to respond to their Adani short selling allegations, in return, Hindenburg questioned why SEBI hadn't made any public disclosures about Kotak Mahindra Bank's involvement with Hindenburg in short selling, which in turn made the Kotak Mahindra Bank stock to drop over 4%. But later in the day, Kotak Bank denied any involvement with Hindenburg and also provided some clarifications which were a bit difficult for me to understand. They essentially said they had no joint involvement with Hindenburg. Because of this clarification, Kotak Bank stock's loss then reduced to around 2%. Other than that, if you see the top Nifty contributors, L&T and IT stocks were the major positive ones. L&T stock increased near 3%. This was because it won a contract worth of $4 billion from Saudi's Aramco, and all the IT stocks rallied due to increased rate cut expectation and the positive US future market. So despite a strong gap up opening of 24,200 mark, yesterday Nifty closed near flat as the number of positive stocks balanced out the negative ones. Overall, in yesterday's Indian market, slightly more stocks advanced 51%, then declined 47%. However, on the negative side, FII were the net sellers for the second consecutive day in a row, selling shares worth approximately 2,430 crore rupees, whereas on the other hand, DII net bought shares but for only 650 crore rupees. So those were the quick takeaway from yesterday's Indian market. Moving to US, yesterday at the European Central Bank, Fed chairman delivered his keynote speech. In that he said they have made significant progress in reducing the US inflation, which in turn now increased their confidence that they can reduce the interest rate sustainably. This optimistic speech was what exactly market needed, so it increased the Fed monitoring tool probability of interest rate cut in September month to 64% from 61% last week. As a result, all three US major index closed positive. Dow Jones up by 0.41%, S&P 500 increased by 0.62%, and Nasdaq went up by 0.84%. In case of US VIX, it decreased 1.5% and moved around 12. Regarding oil, prices haven't changed much since Monday night. Currently, WTI crude trading at around $83 per barrel and Brent crude trading at around $86.5 per barrel. Turning to Indian ADR, except for ICICI Bank, the other three ADR stocks increased significantly. Infosys was up over 2%, Wipro increased by 3.3%, and HDFC Bank ADR, as we discussed earlier, increased near 4.5%. So clearly, both banks and IT looks fresh positive. Regarding GIFT Nifty, at 3 am Indian Standard Time, it closed at 24,352. Equating it with our spot market, this suggests a potential gap up opening of around 100 to 130 points. In summary, global momentum has improved significantly. Indian ADRs, especially HDFC Bank and GIFT Nifty, both indicating gap up opening of over 100 points. However, the question is, will it sustain and close above 24,200? Only time has to tell. Moving on to stock open interest, NMDC, Kotak Bank, Bajaj Finance, Shriram Finance, Hindustan Copper and SBI Card got an increase in open interest with a negative close, indicates the short build-up. On the other hand, Deepak Nitrite, Voltas, Motherson Sumi and Torrent Pharma had an increase in open interest with a positive price close, indicating the long build-up. About the things to look out, early in the morning before our market opening, Chinese service payment data is due. Then at 10:30 am, Indian service payment data is scheduled release. The expected value is 60.4, whereas in the last month, for May, it was 60.2. This data, along with the US future market, will impact Indian IT stocks today. Then in the afternoon, there is a schedule for various composite and service payment data for June month from Europe, such as Germany, France, and UK. Finally, in the night for US, keep an eye on the weekly jobs data, US service payment data and ADP non-farm payroll data. These are some of the key macros we need to watch out today. Coming to technical, as I said earlier, Nifty opened a gap up of 90 points above 24,200 level. However, it couldn't able to maintain due to profit booking and closed near flat. Thus, on the daily chart, Nifty formed a bearish candlestick pattern despite having a higher high and higher low formation. To some extent, the small negative candle at the new high showing signs of bias exhaustion, indicating that the current sideways movement and consolidation might continue for the short term. However, technical indicators like RSI and MACD are still showing positive signs. So if it closes above 24,200, then potentially the upside momentum expects to continue towards 24,400. On the lower end, 24,000 is the immediate support. If it drops below, then it might trigger correction to 23,850 to 23,700 level. For Bank Nifty, it opened 250 points gap up, but then it lost all and closed at around 52,170. Thus, on the daily chart, Bank Nifty formed a bearish engulfing candlestick pattern. In addition, unlike Nifty, in Bank Nifty, RSI indicator is showing a negative bias. If this downward trend continues in the next session, then we need to be cautious. On the higher side, the resistance will be 52,400 to 52,500 and the immediate support is at 52,000 to 51,800 level. If it breaks below these levels, Bank Nifty might face more selling, potentially down towards 51,400 to 51,300 zone. On the weekly options front, the maximum call option open interest was at 25,000 strike, followed by 24,500 and 24,200 with maximum new call option writing at 24,200 strike and then 24,500 and 24,600. Whereas on the put side, the maximum open interest was at 24,000 strike, followed by 23,500 and 23,000 with maximum new put option writing at 23,400 strike and then 23,800 and 23,600. Thus, from this options data, 24,200 is a critical level to overcome. If it does, the next hurdle would be 24,500 with support at 24,000. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.